How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report that was released on Friday for the June 20, 2017 data that was collected from the hedge funds. And here's the report that I posted this past weekend. And here's a breakdown overview of the data that was that I collected. And so that's it. So let's take a look at gold and see what the institutions are doing. We're entering into some really crazy territory right now because we can't see what's really happening. One of the members of the community mentioned to me that this is a time where contracts are ending for options, and therefore a lot of moves are being made by the institutions, so the data is going to be a little bit skewed. And in fact, I did see that on this latest report. I saw big numbers being flashed around. So let's start by taking a look at gold and see what we have here. So with gold, what do we see? We see that the institutions have dropped their longs from 297 to 252,000, and also shorts dropped from 106,000 to 101,000. And this happens with this candle right here. So what's happening with this candle? It's reacting from a tested area of weekly supply and dropping. It falls just short of hitting this weekly area of demand, and now we see a little bit of bullishness coming back into the market. So longs being closed out for profit taking as price drops, and shorts also closing out as profits are taken from the shorts that were added to at the peak over here. Alright, so we're going to have a better indication with next week's report as to what the institutions have planned. Like I've mentioned before, this area of weekly supply or monthly supply is very weak. It's not a well-formed area. It did not remove an opposing, actually yeah, it removed an opposing zone, but this zone was not well-formed. So that's why this one is not the greatest zone, and plus you have this wick here and all that makes it very weak. So we're reacting from a very weak area of monthly supply, and longs closing out for profit taking, shorts closing out. We don't have any indication of what's going on here. The sells here are blue, meaning bias is neutral. Big drop from 204,000 to 150 net position. So at this point, I'm not doing anything. Ideally, what I would have wanted is for price to drop into this area of weekly demand and then wait for confirmation setups to go to the upside if we saw that longs were being added to and shorts were being closed off. That's what I would ideally have wanted to see, but that's not happening right now. So I'm not making any trades on this pair moving forward. And so next we have oil. And we are discussing data that results with this candle, weekly formation candle here. So we see that longs were closed out from 639,000 to 628,000, but the coloration of the sells are still very aggressive. But we can also see that for the last 2 weeks, shorts have also been aggressive. So, like I've mentioned in the past, if we have one cell's coloration red, I typically don't pay too much. I don't normally put too much importance on that one cell or pay too much attention to it. But when two cells become aggressive, that's when I start paying attention. So longs are aggressive and shorts are aggressive. We have to have shorts to become aggressive for a big drop in price like this. We're testing very deep in this non-2-to-1 monthly area of demand. It can continue to hold because its first test was here, second test was here, and now a deeper test here. If this area breaks, then we have a drop down here where I'll be interested in taking longs from here. But that hasn't happened yet. It's still holding, so I'm not making any moves. Coloration of the cells are blue right now, which means neutral, which means to me don't do anything. So waiting to see if longs are going to continue to become aggressive from this area, or if shorts are going to start getting closed out from this area. If that's the case and I see some strong demand being created, then I'd be interested in taking longs up until that trend line right about here. If not, price will break through, and then I'll look to take shorts through this area here down to this area where I'll be taking longs. But we'll see what happens. We're not there yet. We'll see if this zone holds or if it gets removed. Next is the US dollar. Excuse me. So what I was saying about the data shifting heavily because of options is right here. You know, we had 51,000 positions long, and that dropped heavily to 28,000 positions, becoming super cooled off. And shorts just a slight drop from 23 to 22K. So I have to look into more of how the institutions manipulate or move around their positions when it comes time to the option expiry. I want to try to understand this better, so next time I'm thrown in a situation where I see these numbers shifting like this, I can have a better understanding of what's happening. But before this shift, shorts were aggressive and longs were cooled off. But with this big drop, we'd expect shorts to be aggressive, right? But look at this huge drop here. You know, 28, they were holding, and then massive drop down. We're almost at 50-50. Coloration of the cells became very bearish. So right now I'm holding off. What I'd like to see is strong demand kick into the chart, and then a retest so I can take longs. But I want the data to confirm that this is exactly what the institutions are doing. So unfortunately, it looks like I'm not going to be making any moves on the US dollar until at least next week's report comes out, or I start to see some real strong demand kick in on the chart sometime this week. Alright, and that's also going to help me. What happens on this chart is also going to help me greatly with planning trades on the other major currency pairs, because the euro looks like it wants to break up to the upside, and we're going to take a look at that very shortly. So I want to see what happens with this chart first before I make any moves. The Aussie, longs increase, shorts decrease. Net result is long exposure jumps up to 61%. We used to be net position negative 1.5, and now we're positive 15,000. Again, this could be because of options expiry. Not quite sure. We'll have to see what next week reports show. Monthly non-2-to-1 demand is in control. We get a nice monthly bullish engulfing to the upside, showing a lot of demand kicking in, but we are reacting to a tested weekly supply zone, so we should expect a drop. How far that drop is going to be is what the question is all about. We can just get some consolidation at this weekly supply zone. Since it's been already tested, we could just eat through this tested area and then break to the upside, or we can even get a drop. So I'm waiting to see which way it breaks out. But for now, I'm not making any moves on this pair. So let's take a look at the USCAD. What do we see? Shorts or longs get closed out by about 4K. That happens with this big drop that ends up breaking this trend line here. So this drop is important, leaving a supply zone here. And we got shorts being cooled off, but being added to, which results in this drop. But take a look, coloration of the cells here, bright green, long bias, net positions. Although they dropped about 6,000, they're still positive 82,000. So I am looking for demand to start kicking in at one point, and then I'll be looking for longs. But again, this is all based on what happens with the US dollar chart. I'll be watching the US dollar chart very closely to time it so that I can get into this pair at some point. Swiss franc. Again, we see a big drop in longs, increase in shorts, neutral territory right here, and a big drop in net positions. Again, waiting for some strong demand to come in the chart so I can take positions if the right setup occurs. And now we have euro. So the euro, this is a very tricky situation here because the euro looks like it can easily break to the upside. We're sitting in a very weak area of monthly supply. Okay, it's very questionable whether this is even supply, but it's being marked off as supply because technically it has removed an area of demand, which is only demand because it broke a trend line and so forth. So it's questionable, and we have this really nice area of demand that broke a trend line here, and we're in a tested area of weekly supply nested within this questionable monthly supply zone. So all these question marks regarding supply, and we got strong demand below. So, and we got net positions in the green. Although there was a drop from 79,000 to 44, I suspect that next week's reports is going to show an increase back up to these levels. Colorations of the sell are not as strong as they were previous, but still bullish. Longs are aggressive, shorts are cooled off. So, looks like I'm going to be looking for long positions, but not in these areas. I'd be much interested to look for longs down in these areas, just waiting to see if price is actually going to do that, or if it's just going to consolidate here and then break up to the upside, leaving demand to take further longs later on. So again, watching the US dollar to see what happens with that, so I can make my decisions on this chart. Pound US dollar reacted nicely from this area of supply, dropped down, fell short within hitting this area of weekly demand where I was looking to take long positions. Right now, colorations of the sell is slightly green, slight bullish bias, but again, we have big numbers this week on the data, big increase in longs, shorts increase as well, so some hedging as price is dropping. It could possibly be because they want to get a better price on longs before they head up. But I'm waiting to see what happens with price. Again, because this data is very much skewed because of the options, I have to really be careful with what I interpret this data to be. So looking at the charts is going to be more reliable this week to determine what the institutions are doing. Okay. Next is the US dollar Japanese yen. It just dropped, fell short of coming down to this area of demand. Longs increased from 84,000 to 89,000. Again, longs are still aggressive, and shorts are still cooled off. And net position still positive 49,000. Colorations of the sells are green. So the bias is bullish, but I don't see any good setups to take longs. Again, I'll be watching the US dollar to make sure that the US dollar demand kicks in before I take any positions on this pair. Last one is the Kiwi dollar, and longs became super aggressive. 38,000. Shorts became really cooled off, and a big jump in net positions from positive 1.5k to 21k. Coloration of the sells are green, bullish, but I'm holding off because we are technically in an area of monthly supply. So I want to see a reaction from there first and see what happens afterwards. I want to see more conviction with longs from the institutions. I want to see what the US dollar does. Once everything comes into play and I see exactly what the US dollar is doing and what the institutions are doing, then I'll look to start opening up positions on these pairs. Alright, so that's pretty much it for this week's report. In terms of volatility inducing data releases, there isn't any rate releases or anything happening this week. So it could be a little bit of a quiet week, or it could be, the institutions getting packing on their positions that they took off because of options expiry could take place, and we could see some volatility caused by that. So again, I'm going to be doing a lot of waiting and watching on the charts to see what the institutions do, and then I will take my trades once I know exactly what they are up to. Alright, so that's it for me. Have yourself a good week. Trade well.